Startups Inside Out. We've got Rishabh here today. So as an investor, what do you invest in?
I'm fairly generalist as an investor. I'm a founder turned investor. I spend a lot of time in enterprise software, in robotics, developer tools. So that's known turf, and that's something I enjoy immensely. And now everything is AI. So there's obviously AI sprinkled across all of these categories, but fairly generalist. I've been spending a lot of time around consumer startups as well. Feel there's an interesting wave there.
And you mentioned you're a founder turned investor, right? What did you found? Tell us a bit about that.
So I've been in operating roles for over a decade. Grew up in India, so was involved with the early startup ecosystem there. Like this was like early 2010s when the e-commerce boom was growing. Moved to the UK during the pandemic, and then was involved with a developer tool startup here as well. So been doing a lot of operating roles. One of them was a robotics company. It's called Grey Orange Robotics. This was right out of uni. I knew the founders really well. There was hardly any robotics happening in India. And these guys were like super passionate. I was like, if someone is going to do something in robotics in India, it's probably going to be these guys. Helped them raise their pre-seed round. And then joined that company as a chief of staff. That company is now doing really well. I think they've raised more than 300 million since then. I don't know the exact revenue number, but it's a pretty large, either double digit or triple digit number. And the company is like just it's thriving, relocated to the US. That experience gave me the courage to start my own startup, which is called Belong. Belong was in the recruitment space, and then we expanded into other things around people analytics and employer branding and stuff like that. A lot of the stuff that we did at that time seemed pretty novel. So we were like, you can't wait for people to apply for jobs. You have to hunt them down, a lot like what headhunters do. But using technology, we can democratize the whole thing, start selling that as a product to startups and large scale companies. Did that for about 8 years. We were backed by investors like Sequoia, Matrix. And then after that, came back again to early stage startups where I was a CMO of a developer tools startup here in London. So all these experiences, I mean, the common theme is they're all B2B. A large part of it is all enterprise. And in each of these cases, it's with people who I had known for a while. So I love working with people who I get along with. So yeah, otherwise there's nothing else that's common, right? One is in HR, one is in robotics, one is in developer tools. And the surface, they seem very different.
Because you're obviously doing very well on the founder side and like even the operational side as well. What made you then want to go into investing? How did that journey start into that path?
I actually don't think I did very well as a founder financially. I'm very proud of the team we built, the product we built. We had a lot of customers, but when the pandemic happened, HR tech startups were the first to go belly up. But I think over the years, I ended up spending a lot of time advising a lot of founders. And you realize that a lot of problems that people face, there are patterns to it, right? Whether it's go-to-market, whether it's founder conflicts, fundraising, you see the same themes coming up again and again. And I really enjoyed working with the founders, especially at the earliest stages, which is typically, at inception, pre-seed, seed, leading up to Series A. Most of the times post-Series A is when, they have grown up and, they start getting a sense of what they want to do. But I think those early stages is what I really, really enjoy. Even in the startups that I've been in, the kinds of roles I did were often the 0 to 1 roles, new product launches, figuring out things. So in some ways, investing was just another sort of offshoot of that thing of being there at the very beginning. The second part, which is also, it goes deep within me, is I've been a community person. I enjoy building communities. And so investing in startups, discovering, early stage opportunities before anyone else has, there is a strong community angle to it, right? Where you figure out, how do you build that network? How do you build that muscle in evaluating? And I think both of these things are something which are very core to me. They come very naturally to me. And so I thought investing is a good way. And then the kicks of it, right? Getting the bragging rights that, I discovered this company when nobody else did, and then played a tiny little part. I think those things give a reason, a purpose for me to wake up every morning.
You said about like trying to figure out which startups to invest in as well. When you first started, do you think there's any mistakes you made or things you didn't, now you understand better than you once did?
While investing in startups?
Yeah, like there's any decisions you made or why you maybe invest in some companies?
The first few companies that I invested in were just in friends, right? These are people that you have seen, you have known. In fact, I would say that was simpler because you've had 10 years, sometimes often more, uh, seeing that person work. And so you don't really even need to know the problem they're solving, the markets, all of that. You just like, I know this guy, I've seen him work 10, 15 years. I know this person is not going to give up. That's relatively easier. The harder part is once you start taking investing more seriously, then you're going to meet people who you've not known for a long time, and they're going to sell you a story. How do you know what's real, what's not? What might make it more complex is sometimes you might have to take a decision very quickly because the round is getting filled. And there, it's possible to make mistakes, right? Some of the mistakes would be, there are times I've invested, and this is more as an angel investor, right? But like, I invested in a company just because they had good lead investors, right? Like a tier one lead investor leading a company. I was like, you can't go wrong, right? There are cases where that didn't turn out to be a good decision. And there are cases where I would see a founder and they would be like super gritty and they're really smart. They're able to iterate on their ideas, but they were in a pretty bad space, bad market. And I was like, the market wins. But I didn't appreciate the fact that, really good founders who are self-aware can change and pivot into the right markets. Some of those have been very, very, very expensive mistakes in terms of how much money I could make had I invested in some of those companies. So yeah, there's been both sides.
We're talking about earlier as well, how the game works, right? And that because you were a founder and because you did well yourself before, do you think that helps you get onto the best cap tables? Because when you're talking to the founders, you've got a relationship with them, or how big of an influence do you think that is?
It can be. I think it's a bit like, I don't know. It's a bit like, how if you're a good cricketer, can you be a good commentator? First principles would say yes, because you know the game. But there are thousands of others like you as well. So I think what eventually makes you stand out is something unique that you are known for, right? And there's different ways to win in that game. One way could just be, hey, I've got the money, I'm gonna come and quickly commit. That's value for founders, right? The other could be, okay, my check sizes might not be so large, but I will more than compensate for that by having a crazy belief in you before anyone else does. Like, I will go scream at the top of every building, how excited I am about you guys, amplify that message before anyone else does and louder than anyone else does. That has a huge amount of value, right? Or I'm going to become an expert in this field, which could be either an industry or it could be a function, sales, marketing, hiring, whatever it is, right? And I'm going to help you there. I think those are the things which are more enduring, and then that compounds over time because you help one founder, that founder goes meets other founders, word of mouth, it spreads, right? Just relying on what you did in the past can become stale very quickly, because think about it, right? If you go talk to somebody who is younger, they will not know a lot of the companies that you and I would have known as recently as 5 years ago. They're like, what is that? Like, if you go tell I don't know, like a 22-year-old founder, MuleSoft, right? MuleSoft was a $7 billion acquisition. They'd be like, what is MuleSoft? Like, I have no idea, right? So I think resting on past laurels, this industry churns very, very, very quickly. So I think staying relevant, constantly adding value, and realizing that, that network has to constantly be kept alive. And so that's how you get onto cap tables.
I think it relates as well because we've been there for 3 years now. The people who were like super loud at the beginning, or you saw them at every event, some of them just disappeared. And it's natural because we always hear this stat about 9% of startups fail. But then when you're living it, you see actually, oh, okay, these people were doing really well 2 years ago and now they're doing something else. They've just disappeared as well. But you mentioned about the word of mouth, what like founders are saying. What do you think they say about you? So they're founders that you invest in that you have a good relationship with.
Yeah.
What do you think they're recommending you about?
There'll be some things that will be common that everyone will say, and then there'll be some things that will depend on the individual relationship that I have with them. I think most of the founders will say that Rishabh is someone who is extremely helpful. He is quite selfless. He picks up the call whenever I message or call him, and he's always there. They'll also say that he's honest. If he doesn't know about something, he'll tell you he doesn't know. But he goes out of his way to be there with you during the trenches, right? In specific cases, I think they'll say that he's able to understand certain parts of the founder journey that it might be hard for me to discuss with, say, a VC that I could with him. For example, imagine a case where you're having co-founder difficulties and you have to let a co-founder go, right? This is like, I remember one of my investees came to me and they're like, this person is now not, like, we decided to part ways. How do we figure out the equity situation? This guy still has like 1/3 of the company and it's going to be dead weight. How do we manage that, right? And so there's multiple ways to do it, but there are certain shitty ways of doing it. Right?
Yeah.
And I was like, don't do it in a shitty way. Here's a smart way of doing it, right? So there's a lot of such things that I think a lot of founders would talk about.
And you've worn both like the angel hat and the VC hat. How does it differ the way you look at investments with the
Oh, it's different. It's so different. In the angel hat, it's your own money, but the ticket sizes are small. And you can take you don't have to convince anyone, just yourself, maybe your spouse. But you can just like write it off after you invest in it, right? And as an angel, your motivations are very different. Like as an angel, my motivation was not necessarily to make money. Of course, I would evaluate it from that lens, but like it was more about backing an interesting idea, wanting to work with a certain kind of a founder, maybe even like building a network within certain cohorts, right? As a VC, your outlook changes because firstly, you have to return a fund. And so the kinds of deals that you might do as an angel, you will not do it. Your bar is much higher, and that also changes with the kind of fund you're in. So if you're in a 10 million, 15 million small solo GP or like a angel fund, you're thinking closer to an angel in terms of you don't lead rounds, you don't have board seats, you try to help the best to your abilities, but eventually like you're not on the board. Versus when you're in a fund, you can actually shape the direction of the company. You are a fiduciary, you're managing somebody else's money. The outcomes have to be really, really large. You also have to think about rights. So like as an angel, when you're signing a term sheet, you're like, hey man, don't worry, just don't be a dick to me and just like, I'm gonna sign this and send it across. As a VC, there's a reason every VC firm has a legal team and a finance team, because you're like, if everything goes well, that's great, but there can be down rounds, there can be financing rounds where you can get massively diluted, and there can be other cases, right? So you start thinking about some of those things much more carefully. It's a very different kind of a role, and many people don't like it. Like I hear from a lot of people saying, I thought I would like VC. It just feels like a lot of operational work, like versus an angel, I'm just going and doing the cool stuff. But VC seems like a drag. I've heard this from a lot of people, and so it's important to know where you stand, right? Like, do you really enjoy that stuff? The other reason it's different is, so as an angel, even when it comes to liquidity, right? So as an angel, you will have an opportunity in a lot of cases with every subsequent rounds. The rest of the cap table actually wants you out in some ways, right? They want to clean you up. If the company is not doing well, then sure, like we're all in the same boat. But if the company is doing well and it's getting markups, people want you out to create more room. As a VC who leads, things are very different. If you led the round and you own like 20% or 15% of the company, you can't exit. The only cases where you will exit are the companies that you don't want to exit, because everybody wants it. But the places in the middle, it's very hard for you to exit and get liquidity. So you're seeing things like secondaries funds and things like that come up, but otherwise it's hard. So you have to start thinking in those ways. Those things start mattering a little bit.
Hello. I hope you're enjoying the show so far. I'm Amardeep Parmar, co-founder of BayHQ and the host of this show. For those of you who don't know, BayHQ is the community for high growth Asian heritage founders and investors in the UK. Over 7,500 people have attended our events, 200 people have been for our impact programs, and obviously there's been over 250 episodes of this podcast. If you want to join us and take part in the programs and come to the events, go to bayhq.com/join. We also just released our first ever book called Startups for Outsiders, which you can get on Amazon now, and the link is in the bio. Hope to see you soon at our event. Hope you enjoy the rest of the episode. And what part of VC have you enjoyed? You said it's like very different, but you're obviously going down that path as well after being an angel for quite some time. What do you enjoy about VC or the different way of doing things?
I think there's a bunch of things that I enjoy, and it's obviously still early days. I'm also sort of learning a lot of things. I think the most important thing that I enjoy is the team. You're not alone. You have really smart folks who've been doing this for a while that challenge your thinking, and you see how you actually go build or select that enduring company, the entire cycle, right? I think the second part that I really enjoy is sort of also seeing how the whole fundraising aspect of it works. Like, how do your investors view you? They have a very different way of looking at the world, right? Like, you are essentially fitting into a multivariate equation that they have, right? Which can also be humbling. Saying that, okay.
The thing I always find amazing when people talk about VC is such a tiny amount compared to the overall private markets.
Yeah.
Like P is way bigger, but in this bubble, we think about VC as the top. But actually it's like a tiny part of the overall puzzle for like many LPs, right? Especially the Pantheons and the larger companies as well, right?
Right.
And it's really interesting to think about, right?
It is. I mean, it's certainly the loudest, but there's a reason for that, right? I think it's super interesting how that's also evolving. Like, the VC firms are becoming bigger. Like, you're seeing a lot of VC firms starting to do PE style deals. So there's a bit of sort of evolution happening in that whole sort of space. But yeah, I think that whole part of it, the whole fundraising part is a muscle which you start developing after a few years, because the first fund is always friends and family, maybe a family office here and there. From second, third fund onwards is when you start talking to institutions, start getting very different. So that's the other part that while I'm not obviously involved in the fundraising, just sort of listening to what are the kinds of questions that we get asked, how do you present the fund is something which is super interesting for me. And then I think just coming back, I think the other part that I really enjoy is just helping the founders. You've done an investment, how do you make it grow? Founders have all kinds of challenges that they face. Often many of them fall either around operational stuff, could be hiring, fundraising, stuff like that, but also some of the other questions around, how do you think about the company's direction, and like, what do you do when you have 50,000 competitors springing up every day, because the space you thought you were doing at that time, you thought it was a boring space, and suddenly it became a hot space, and now you have like a new competitor coming up every day. I think working with the founders, figuring out those things is also something that I really enjoy.
That last bit as well, we're seeing a lot
that keeps me closer to the operating part as well. So I'm under no pretense that once I stopped operating, I'm not an operator. The field evolves, but like, working closely, seeing across a portfolio, what is working for each company at that point of time helps at least keep you current to some extent, right? Like, so.
We're seeing that a lot with founders now, especially like people in our programs, about they're really worried about, okay, what can I build if AI is making things so easy to compete with? And how can founders even think about that now? And as an investor, when you're looking at a startup, you think, okay, before, okay, they can have a bit of a moat because it'll take time for other people to build it. Now it seems to be so easy, or there seems to be so much like chaos in this ecosystem. How do you get that certainty around this is a startup worth backing that can manage some of that competition? Well, how are you thinking about it? It's obviously such a
Yeah.
situation now.
Yeah. There's different ways to navigate. And a lot of it starts with, you know, having that conversation with yourself every day. What kind of investor am I? What do I want to back? You can have certain sort of, ideas as an entire partnership, but then even at an individual level, what is it that I resonate with? I think those things it's a constant conversation, right? So now one way to approach this is, I can't control the fact that if creating something has become easier, there's going to be more people getting into it. So I might think it might not cost so much, but that might not accurately be true. It might not cost so much to create an MVP, but now to, grow to the next stage, it might be equally expensive. Or I'm just spending on something else, but like the total quantum is not going down. And so one way to think of it is, okay, let me take a riskier view. Let me take a more ambitious 5, 10, 20-year view, and let me go back those things that people are not looking at today, with the hope that people will start caring about it a year down the line. A year down the line. If they don't care about it 2, 3 years down the line, then you're in trouble as well. But there are enough opportunities where you can find something really interesting at hopefully a reasonable price. Might not be cheap, but you don't want to pay stupid prices. Um, so that's one way of looking at it. The other way of looking at it is, okay, well, if this is a very, very big space and there is a lot of noise, there's this one team that has figured out an interesting, maybe not hack, but a technique or whatever, to give them a head start by a few months. And it's good enough that they can execute on this. So they're really good at executing, but they're also really good at reiterating and technical prowess. So in which case, yes, it is a frothy or a red, maybe not red, but like fairly competitive space, but there's no clear winner yet. And it's a big market. So that's the other way of looking at it. Like somebody's going to be a winner. Why not this company, right? So that's where you start thinking more about, staying power, great execution capabilities, versus in the first category, you have a bit more time where you're like, you know what, we can maybe go hire somebody who can execute. If they're really good on technology, GTM might not be so strong, like very different approaches, right?
Yeah.
The third would also be things like, let's look at regions where nobody else is looking at. The whole world discovered the Nordics in the last 18 months. Nobody cared about it till then. And you can see that, right? How many funds exist there other than a couple? I feel like something like that might be similar. Sitting in the UK, it fascinates me how little overlap the UK has with France. It's just a couple of hours away, the Eurostar, but like how many UK funds have a French office? They have Berlin offices, they don't have Paris offices, right? It has been a different kind of an ecosystem. Same thing could be said about Eastern Europe. So I think there's interesting opportunities that also just come up by being in a region where you don't have to compete with 50 other funds, which gives you time to get to know the founder and take a call, right? So I think there's some of that. The other part is historically you would, and this is where you get into the fund size versus the kind of thing. So historically you would, say, okay, you know what, I'm going to spend more time on maybe understanding the market, getting to know the founder and all of that stuff. That's the only diligence that you could do. And that's great as long as the ticket sizes are small, right? So you're putting $1 million in with very little there is no business diligence to be done, but understanding the market and the founder, great, right? It works, it doesn't, whatever, right? Like it's priced into your fund model. It starts getting tricky when you're applying the same approach, but the founder is now raising $10 million. Like, there are pre-seed rounds happening at $10 million with the same amount of little diligence, right? Is that a game that you want to play, right? So I think there's enough of these conversations, and you can go and look at anything. I think for me personally, I enjoy spending time with founders that are underdogs. I feel like it's like an immigrant thing. Like, um, I think people who don't have the right pedigree, might not be in the right circles, but are hungry, are gritty, are really smart. I'm obviously a bit more biased towards B2B enterprise and things like that, but honestly, I think being able to meet someone who just sort of bowls you over with their energy, and every subsequent conversation that you have with them makes the previous conversation look completely different, and so you see them growing extremely. The delta is really high. Like, that's like super exciting, because then you lean in more as well, right? You're like, how can I make this person even more successful? It gets this infectious kind of thing. I think that's something that I personally, what I enjoy the most. So that's what I look for.
We're talking about like the valuations at the moment as well. We said where now if somebody comes from a traditional pedigree background of some kind, they're raising these massive rounds to begin with, and if you're raising at like a 50 million, 60 million like first round, that exit has to be so much bigger for you to return your fund, right? And then when you're backing the underdogs, usually the valuations are lower as well. And on the underdog bit, I think a lot of people listening to this are probably going to be on the underdog side, right? So they're going to be thinking, okay, I'm an underdog, but how do I portray that like I'm somebody worth investing in when I don't have Harvard on my like resume, or I worked at Revolut? And how do you try and pick this up with people where when you look at their background, it's not obvious that they're the kind of person?
You have a honest conversation with yourself, saying, what do you want to do? And talk to a few more people that might have gone through that path, or read up about it online, or try to read the room when you talk to investors. And hopefully sooner than later, you realize what are the parts where you have an edge and what are the parts where you feel that you might have to work harder. And once you have that honest conversation, you realize that how is this game set up? Where are the parts where I might not have certain advantages that somebody else might have? You can then at least start thinking. So the way it goes is something like, well, if I'm trying to create something which is where I can just quickly show a lot of traction, right? Great. Somebody else might be able to raise without showing the traction. In my case, I might have to show a little bit more traction, so that's where my credibility comes in, because I might be competing with 200 other people that also don't have credentials. And so in that perfect market, how does somebody stand out? You'll be like, okay, let's go with the person who's worked at, a top AI foundation. But then there are certain places where it's going to be even harder for someone who doesn't get the game to win. For example, a kind of industry. So imagine an industry where you need to raise tons of capital and you're not going to see a product out for a long time, like a foundational model, right? So if you go and you've not worked in that space, right? Because a lot of these companies that are going and raising that round, what are they really raising on? They're raising on the fact that, hey, I have an insight that other people don't. I have a network which will allow me to attract talent, and I know the best people in that field. And if you bring 8 of those best people in that room, we will build the best product in 18 months, and we're going to need whatever, let's say $50 million over 18 months to raise, right? Like, that's, until then, you will not have anything. You might have some benchmarks or whatever. Like, if that is the game you're playing, then, you need to be self-aware that, okay, this is what people are going to be looking for. How can I go convince that other investor that I'm talking to that I'll be able to attract a similar talent. This is very different if it's a vibe coding app, right? Or something where you could release a product out there, show a lot of feedback, um, and you'll be able to. So I think understanding the kind of game is really important. I think the really uh, stellar founders, and I would say it's easier to do that when you're younger, will just find their way to hustle into the right circles, right? They'll be like, dude, like, I don't know anyone. What do I have to do? Do I have to apply to YC? Do I have to take a flight and go to the valley? Do I have to become buddies with this person who can connect me to these? Like their brain will be thinking in those ways, right? Like I think you play to your strengths, and that's the way to win in this game. Because eventually the aim is what? Eventually the aim is to build something that you're going to be proud of, something that has a shot at greatness, something which is going to be something that customers value. And so all of these other things stem from there, and you figure out, okay, where do I have my strong suit?
I think, like you said as well, is like the game is unfair, and there's no point pretending otherwise. Like if you're going against somebody who's got parents who can bankroll them and you don't have that, then you can complain about it, or you can try and figure out, like you said, how can I gain an edge? And there's so many people I know who, it's like you said, it's like they figure out how to get into these rooms.
Yeah.
And sometimes like, I don't know how that person went into this room, but they keep doing it, and then eventually they get familiar, and then they get their relationships really well. And you see it so often, right? Because I think what a lot of people forget, and it's part of the LinkedIn culture and stuff, there's a lot of people who you just think they've always been successful. You don't realize actually they had 6 months of not paying themselves and 6 months of things all going wrong and self-doubt. And obviously as a founder, you would know that yourself, right? When you're going through that experience, even when you're going to try and raise a fund, everyone kind of looks at VCs as they know everything. But VCs also think, okay, how do I convince an LP to now invest in me too?
Yeah.
And
in fact, it's harder, right?
Yeah.
Because as a founder, you can still, I mean, there's many more kinds of companies than there are VC firms.
Yeah.
Right? Like imagine being a fund, going to an LP saying, yeah, we also are a generalist investor investing, $1 to $5 million checks at seed and pre-seed. That doesn't sound quite that differentiated. Sure, we've got a few, whatever, right? We've got a platform team that helps in hiring versus, here's a new startup for. So I think VCs spend a lot of time on crafting the story and figuring out how they can create that differentiation and edge as well.
And you obviously believe a lot in immigrant founders and people from the diaspora, right? Why is that? Why do you believe in them so much?
I'm one, but I think historically, if you look at a lot of value that's been created, right? Like in startups, there's enough historical precedents that migrants and immigrants have created insane value. And it's because the life experiences that you have, you're changing countries, you're changing cultures, you're facing rejection, you're trying to find a job where you don't know anyone. I mean, this is entrepreneurship, right? Like you've already had the boot camp, or your parents had the boot camp. If you're from the, I was gonna say Asian community, but I think it applies to everyone. Like things like frugality are taught to you very early on. So I think you're sort of hungry. You're different. And there's enough experiences, right? You could have been bullied as a kid. You could have felt out of place. You might not have the right accent to fit in. You don't understand, suddenly the different food you need to eat. Like it's all kinds of challenges, right? And I think that builds the different people react to it in different ways. And I think, it can have a strong effect on entrepreneurial behavior. I don't think a lot of people grow up thinking that we are going to be entrepreneurs, but they might have the building blocks that later make them successful. So I think it's you need to work harder as an immigrant, and you're trying to prove yourself. I think it's that doesn't go away, and I think that makes it just. I also feel like maybe you might value things more when you get it. So I think that goes a long way, and you always want to back those kinds of people, and we've seen that historically, right? Like US as a country has been built by immigrants. Has been enough studies. Even when I look at Europe, like when I look at the UK, a lot of the big stories have come from Iranians, from Eastern Europeans, from people from Russia. A lot of the really, really big outcomes here, if you look at like DeepMind, Revolut, a bunch of the fintech companies. Like, I mean, it's insane, right? And now we are seeing that sort of accelerate more with the South Asian diaspora, right? Like, there's just so many people, and it's a math game, right? You pick out all the tech companies and you look at, okay, after the CEO, the next line, the engineers, the product managers, the designers, the marketers. There's so many people from the South Asian community. You start looking at immigration data. Where are people coming from? 1 in 2 are coming from places like India, right? So you're like, okay, like I extrapolate that over the next 10 years. What does that mean? That means that, okay, just by the law of large numbers, many of them are going to start, um, starting up. So that's one whole part of it, right? The second part of it is also, I think, immigrants are more, I want to word it carefully, but I would like to think they are more flexible. So imagine the scenario where if I'm in the UK and I meet an immigrant and I'm like, hey, you know what? If you start this company, I think it's going to be really, you're more likely to see more success in the valley. Who's more likely to just be like, great, I'm going to pack my bags and go to the valley tomorrow? My sense is would be somebody who's an immigrant, because they're like, we've already done it once. Versus somebody who's grown up here, might be harder. I don't know, right? Like that's what I hear.
It's because it's a muscle, right? It's once you've done it once, it's easy to do it again.
Exactly.
It's less scary.
Yeah. So I feel like it's increasingly, like it's also clear that the adaptability and things like that are a little bit. You just have like a thicker skin. You're more adaptable. I think those things translate very, very well into entrepreneurship.
Are there any other trends that you're finding really interesting at the moment, just in the investing space and how things are changing? So obviously, like the increase in immigrants and this people at the lower stages of startups now starting their own companies. And then we sort of look at like AI and how it's flooding the market and how there's kind of competitive things.
Yeah, absolutely. So I'll tell you, right? Few trends that I'm seeing. I think we are entering. It's interesting if you look at the geopolitics. Geopolitics was never really a factor when people were starting companies. Everybody were friends, global trade, the world is flat, all of that stuff. Look at the last few years. Damn, the weekend. So I think geopolitics as a source of ideas for new companies is something that's gonna come up. In some ways, things like crypto and stuff are like an extension of the same idea. I think there's a lot of interesting stuff that's happening. Just if you look at geopolitics cross startups, that's one part. I think the second part is something I've been thinking about, which is, see, on one side, we have a pretty bad job market, right? I'm wondering, one of the things I'm seeing is, if I was a decently smart and ambitious person, would it not be better for me to start up than to take up a job, which I'm finding it hard to get anyways, right? So one of the trends that I'm seeing is that a lot of smart people are looking at entrepreneurship also because they're not able to find roles. Or the roles they like. So they're like, let me just give this entrepreneurship thing a try. Let me try fundraising. If it works, if it doesn't, 6 months, whatever, right? Now you can look at it in different ways. There is obviously a cynic's view of this, which is, oh, this person is probably a tourist. There's another view, which is, oh, there's a larger set of people who are now entering the funnel. But that's an interesting trend, which is, as cohort sizes of all the accelerator programs become bigger, as there are more and more seed funds, the number of people who might jump into startups just because they don't want to do a job. That's
and it might be a low hit rate, but then if there's more of them, So if there's 10,000 people got let go by Meta, and
What are they gonna do?
like say 100,
Nobody else can match their salary anyways. Might as well, have a shot at glory by owning 90% of.
And it's one of those interesting things we always say, like, you want people to be starting companies because they're obsessed with the problem. But in reality, sometimes people kind of fall into it and they learn to be obsessed with the problem later on. And it's one of those hard things that when we're kind of coaching people, like helping people, when you look at it, it's like when we did Bay HQ, we didn't expect it to be what it is today.
Yeah.
So we set out with a goal that's kind of stayed pretty much. Similarly, we want to help like our community.
Yeah.
But the way we're doing that is totally different too.
Yeah.
And I also know that if you look back at this podcast, and look back at episode 1, or you look back at our year reviews, the stuff I was saying, it's like we're not doing any of that anymore.
Yeah.
And I don't think enough people watch these episodes to call me out on it.
Yeah.
But it's good. But it's like you don't know when you first start, and you kind of fall into it, and you learn, and you get better.
Yeah. Yeah. Absolutely. Yeah. And sometimes, like for example, you might meet founders who you don't like. You know how there's been this study which says that like it's interesting, right? Like increasingly over the last few years, you'll hear a lot of investors when you ask them what kind of founders do you look for. Earlier, it used to be somebody with grit and passion, missionaries. Increasingly, I'm hearing things like, I want like a neurotic person, or I want somebody who's had like childhood trauma. And like you heard that whole sort of side of things, or like we only invest in people who like, I don't know, like fought in a war, or like there's that kind of narrative. Like I want something which is edgy, not criminal, but edgy, but close enough. And like, so I think there's all kinds of things that one can use as a framework to find interesting folks to invest in. So yeah.
So what we do now, so like 200 episodes on later, so about 2 years time, we'll get you back on again, and we're going to get like a little TV in here, and what we're going to do is replay this moment, right?
Yeah.
So in the next 2 years, when you come back on next time, what would you love to say you've done in the next 2 years?
I would love to say that I have backed a bunch of incredible founders. Maybe some of them have proven themselves, but many of them are on their path because it's 2 years. And I would love if many of them are underdogs, people who had to claw their way to win. They are hungry, super ambitious. They are making Britain, sort of putting their flag here and saying that, we want to build companies from here, at least on day one. I would love to be a part of multiple such stories. I think it's an incredible time to be here. We've got incredible talent, and I think that's something that I wake up every morning hoping. And so I think over the next 5 years, hopefully some of them would have gone ahead and become big enough that they inspire the next set of people. Because I feel like with a lot of the whole underdog thing, like it's multi-pronged, right? Like you're obviously creating value for yourself and all of that stuff, but like you also end up becoming a role model for the next set of people, and that is so powerful, right? Like if you think about the number of people who want to do entrepreneurship because of Steve Jobs, right? Like they might not know anything about Apple, right? But like they're just like, I want to do this because I saw Steve Jobs video, or like Elon, or like people look at Vinod Khosla and they're like, he's the most successful Indian to be in the US or whatever. Like, I mean, it's different stories. I feel like in technology, that's happened in UK for like the whole country, like at a broader level. Within the South Asian community, we are yet to have who's the Vinod Khosla of UK, right? I think there are a few emerging examples of that, like Wave, that Amar Wave is obviously done really good. In some ways, if you look at what T.S. Anil has done, Monzo, like being the CEO, I think there's going to be more and more of these companies, right? And so you want like people who inspire the next set of folks. That's going to be, I think, really important.
Awesome. So quick fire questions now. So who are 3 Asians in Britain you think are doing incredible right now, and do you want to shout them out?
Yeah. I'd like to shout out, one is Preet. Preet is an investor at EQT Ventures. He's young, super energetic, super helpful, awesome guy. Like if you're a founder, you should be talking to Preet. He's great. The other is this incredible founder who I've gotten to know over the last couple of months. His name is Anil. Anil comes from India, is building a super exciting company in the memory space, and is building it out of Aberdeen of all the places. I think what he's doing is just, it's awesome. I think they're onto something interesting. A third is Samir Singh. Samir Singh at Speed Invest he comes from Hyderabad, which is where I came from in India. I think Samir is one of the smartest guys when it comes to consumer startups, network effects. I think the whole country looks to him for any kind of, thought leadership on that topic. And he's helped so many founders to just think through how to build their business. I think these three, there's so many more, but I think these three do incredible stuff for everyone.
Awesome. And then if people want to find out more about you, where do they go?
Rishabh Kaul at Twitter. Just type in Rishabh Kaul on LinkedIn. And rishabkaul.xyz is my personal website. But yeah, if you just type my name, there's just me and one other Rishabh Kaul who's a photographer in Prague. I'm not that guy. Every other Rishabh Kaul is probably me. Just Google my name and my email. Everything else is fairly easy to find. So.
And is there any way that the audience could help you?
Yeah, I mean, I love reading emails. I love hosting events. I love meeting people. If you're working on interesting ideas, please, it's never too early. Feel free to contact me. If you want to jam on ideas, it's great. Every Indian who runs an Indian restaurant in the UK, if you want to host an event, please reach out. I would love to host meetups, hopefully with the BHQ team.
Let's do it. Yeah.
So yeah, that's how people can help me.
And then thanks so much again for coming on. Any final words?
I'm just like, I've been seeing your journey, yours and Gurveer's journey for the last couple of years. It's just insane what you guys are doing. Like you were talking about how it's just grown. I think it's so needed. I'm a massive fan. Wish you guys really all the best. I think the community needs this. This is how things grow, and I'm sure like 10-20 years down the line when you look back at this, it'll just bring a tear in your eye.
Hopefully, yeah.
It's just it's amazing.
Thank you.
Yeah.